Jeff Peterson from Heartland Farm Partners is our market analyst this week. The U.S. Department of Agriculture says moisture conditions have continued to deteriorate in Argentina's largest soybean growing region, where rainfall from November through January was 1/5 of normal. Traders seem to have noticed. In the first 3 sessions of the week, the March contract gained more than 30 cents. While Argentina accounts for a comparatively small percentage of world soybean exports, it can make up nearly half the global oil and meal trade. The situation is more favorable to the east, where Brazil's harvest has just begun, and the USDA believes yields could push the country close to what growers saw during last year's record crop. We talked with Jeff Wednesday afternoon and began by asking him to dissect the soybean market rally.
You know, this rally goes all the way back to really the middle of January, and it's really hard to believe, Jeff, but we're up about 5.9%. We started off at 960, and today we're in the mid, 1015, 1017 area. And the big run, has really been over on the meal side. It's really all about the meal, and that same amount of time, meal's been up 16.7%. So there's concerns coming out of South America, but the big thing we have to remember is that even though there's concerns, if we do see some rain come in, which we know at some point it will, ultimately I think we do see this market turn around. It's just a matter of how high it goes, and that's what we have to be very careful about in this type of move.
Those concerns specifically are in Argentina. Why has Argentina had so much influence?
Boy, they sure have this year. It started off with some talk about La Nina and the impact it could have on Argentina, and that's following through. The big thing is because of the amount of meal that they do produce and their importance. If you look at it, soybean oil-wise, they're about 49% of the world exports on soybean oil, soybean meal about 47%. Of their soybeans, they end up turning about 78% of those into soybean oil and meal. And so if you look at that, how does that compare to the U.S.? Well, we only turn about 44%. So it's all really about the meal and the markets that they're going to go ahead and service.
So are you telling me the meal and oil are so important that Argentina, the third largest exporter of the oil seed, can have that much impact?
Yeah, that's what we're saying so far. But I think the story goes a little further than that, Jeff. And a little bit of that is the fact it's been kind of a perfect setup. We had the funds short on both on the bean side, and they were that way on the corn side. They're still short on corn, but they actually, as of this morning, we have them long about 17,000 contracts of soybeans. They've also quietly been building a long position over on the meal side. So they're betting right now that these markets are going to go higher. But I think this is the type of market that we really kind of got to be careful with from the markets. It's a little bit fragile.
If the meal is rallying so much, why wouldn't the end user, the buyer, just take the oil seed and crush on site? Is that a possibility for some of these buyers?
Yeah, it definitely is a possibility. We know that if you take a look at the big buyer in the room always, isn't it? It's China. We know they've got crush capacity to do that, but it comes down to dollar and cents. If they can pick up the meal somewhere else, they'll go ahead and do that. If they need to crush some more beans, they could. The other thing is that we have to look at the amount of crush capacity out there. We can probably add about another 5% to the crush, which means we could send out about another 2 million metric tons of meal. Our estimations out of Brazil would say that they probably have about 20% of their capacity yet that they could send out on the meal side, which is an amount to rounding off around 6 million metric tons. So there's still some excess capacity out there yet. The question is what price will it get pulled in and who will send it out?
Anticipate those margins are getting very nice.
You know what, the margins are very good, and we've seen that here locally. What's happened is that we've seen a run up in the beans, but yet at the soybean processing plants, the margin, basically the basis is not moved. So we've seen a very nice increase in crush margins, and what the processors are telling us is that send us all the beans that you can send us. We're still willing to buy them at that same basis we were at before.
Do you think Brazil has helped temper this market at all? Because the USDA believes conditions have been very good there and yields could be very good as well. So have they helped drag the market down at all?
Yeah, I think they have. I think they've slowed the move up a little bit. I think without such good conditions up there, I think the one part about that, let's look at it, out of the last report, Argentine production came down 2 million metric tons. What they do, they raised Brazil a couple more. And so overall, we're fine on soybeans. And the one concern coming out of, I think, Brazil is that it is a little bit wet. So that is slowing up harvest. But I think as we get going, they could put some pressure on this market yet, because I think we could see a little bit bigger yield out of Brazil yet.
So I'm going to slide into some selling options for soybeans here, and then we'll move on to corn. But how do you work this out, because it feels like this thing could collapse if there's rain in Argentina or if Brazil yields start coming in very well. But on the flip side, if it doesn't rain, it feels like there's move to the upside. So tell me what this means.
Yeah, so what I think it is, Jeff, and we were just talking about this in the office this morning, and I think this is a move that we're in amongst. What we know is it'll end at some point quicker than we're ready for. So what we have to do, I think, is we have to get some sales on. We're setting about 50% sold of our insured bushels, give or take a few percent. We're looking to go ahead on any additional strength to get additional sales made. What I think you could do, just in case the top would head off and go higher, I think this would be a perfect place. Make your cash sales, come up and re-own with some cheaper options on the call side, and that way you've got a floor in place, because if conditions do change and this thing comes back, there's a lot of room for it to come back.
There has been a plodding rally in corn. Does anything look attractive?
Yeah, I think so. I think what we're looking for is that we'd like to go ahead and see our first round of corn sales really up around that $4 area. If we were to look back to last year and say, what do we think is possible? Well, last year we actually got up to about $4.18. Is it possible we get a chance to sell another round of sales up in that area? It sure is. We'd like to get a couple rounds of sales on before the planting intentions report at the end of the March, because we're not sure what that's going to show. Is it possible that all of a sudden maybe the acres aren't a lot different? So we're looking to reward the rally in here, even though it hasn't been great. On the old crop side, we wouldn't mind also making some sales here on some of this old crop at this time.